Hey guys, this is Karthikeya Kantwal from Apex FinServe, and we will not be discussing fight rates for the coming session because it's the weekend now. So instead of that, we'll be trying to catch up some new concepts that we can apply in the coming week's trading sessions. So we'll be discussing a very basic price action derived concept today, which is the Fibonacci retracements. Now I will not be going into the very depths of Fibonacci retracements, why it works, where it originated, etc. etc. I will be giving you guys a brief into the advantages of using Fibonacci and how to plot it effectively. For more details or for in-depth analysis on what Fibonacci is, what Fibonacci numbers, what do they signify, what is their importance, you can read numerous articles on the internet, or even better than that, you can directly head on to the Zerodha Varsity link for Fibonacci retracement tools, how to use that, which I'll be giving you guys in the description of this video, so you can check that out as well. Now before we jump directly onto the charts, or before I show you guys a complete finished sample of what an analysis using Fibonacci retracement and a couple other concepts look like, I think it's better that we have a brief idea of what Fibonacci actually is, or what do these retracements stand for. So basically the thing is that a Fibonacci retracement is going to give you the plausible points to the extent of the retracement that is going to happen for the underlying major trend. Or if I want to put it in technical definitions, as you can see on the screen, so whenever a stock is trending very strongly in one direction, the belief or the idea is that the retracement or the pullback is going to amount to one of the percentages included within the Fibonacci retracement levels, which are 23.6, 38.2, 61.8 and 76.4. Now some of them also include 50%. I do personally, I like that level. Now it has its advantages and disadvantages. With Fibonacci, the particular drawback, or not the drawback but the rather flaw of the concept is it is not a standalone trading tool. You need to use it in conjunction with other concepts of analysis. I personally combined it with demand and supply zones, which I have on my chart. So whenever I have a confluence of these two, either an important Fibonacci level or a demand zone supply zone interaction, I take the trade. Keep in mind that it is not going to work as efficiently by itself, and it is not going to tell you the exact pinpoint level of entry, but rather a high probable zone or a high probable area of entry. Now there is one key thing that you need to be versed with when you are using Fibonacci retracements, that is getting the identification of the swing highs and the swing lows correct. Now there are multiple ways of doing that. Since Fibonacci is a price action derived concept, it is subjective to your identification of the swing highs and swing lows. So basically the efficiency of your plotted retracement is entirely dependent on how how aptly you're identifying the swing highs and the swing lows. There are two ways that I am aware of doing that. The first one is you can consider the recent swing highs and the recent swing lows. The second way is, instead of considering the immediate swings or the closest swings, you can consider the major underlying swing highs and the swing lows, which are yet to be broken. Now the second one is what I use, because the time frame that I'm using is fairly large. It is 15 minutes or 1 hour. We'll be checking out 15 minutes today. Now I think that if I consider the immediate swings, the levels that I get, they are too close by, and it seems as if I am going to have one trigger every hour or so, which I personally don't like. So I use the major swings or the significant swing high or the significant swing low, which are yet to be broken. Now coming to the chart examples, so we are going to be looking at three charts: Indecent, which is an equity example, along with the staple Bank Nifty and Nifty charts. Now I am pushing these notes aside. Now with IndusInd Bank, I have already marked my demand zone and my supply zones, so that is already taken care of. I am not covering how to do that today because that is a fairly lengthy thing, and if I cover all of this together, it is going to be fairly too much for me to make as well as for you guys to watch. Now these zones, they have already been plotted. Now when it comes to identifying the Fibonacci levels, as I told you guys, there are two ways. You can either take the significant swings or the immediate swings. Now if I were to mark my immediate swing at this point would be this lower low lower high formation which is currently running, which is fine. This is one way to do it, but this is not how I do it. How I do it is I take I identify the major swings. Now if I were to identify the major swings, I can clearly say from the level of around 470 473, as you can see, the price has started forming clear higher low formation. So I take that as the base and I mark my higher low pattern, and every move that is happening right now is basically a part of that particular structure for me. Now there are two ways of doing this and I showed you both. Now if I were to plot Fibonacci for both of them, starting with the first one that we had, if I plot Fibonacci on those very levels, this becomes my swing high. Now if it is a lower low lower high formation, you start with the originating point, which is going to be the swing high. If it is a higher low formation, you start with the originating point, which is going to be a swing low. So our swing high comes to be at 577. So starting from that point to the recent low, which is 532, so that becomes my swing level, or that becomes my Fibonacci retracement. So the idea here is I have multiple levels. I have 0, 38.2, 50, 61.8 and 100%. And on the downside I have minus 38.2, minus 61.8. The idea here is all of these percentage points are possible depths of retracements. Now I can see that one particular level at 38.2 aligns with my zone at 550. So this becomes a high probable entry point for me. So if I were to take an entry on this using this particular method of plotting a retracement, I would prefer to take a short entry at 550, at or near 550, depending on the price action at that particular point. Now this also happens to be in the direction of the lower high lower lows formation, or the lower high lower low structure, which I use to identify my Fibonacci retracement. Now this is one way to do it. However, this is not my way of doing it. How I would like to do it is, as I have the same chart open on two different tabs. As I said, I would like to plot a Fibonacci retracement not from the recent swings but from the significant swings. So I start at roughly 473 474 and I end at 577. Again, as I said, the originating point is going to be the swing low for higher highs and the ending point is the recent swing. Now here again I have to find where the price actually shows some kind of confluence with my zones. So I have 50% retracement along with a zone at about 525. The second one that I have is 61.8 with a zone at about 513. Now I do not have any other confluence visible right now. The price has apparently taken bounce from the 38.2% retracement. However, I would not have personally taken an entry because there's no confluence, and as I said, this is not a standalone tool for entry. So if I were to use this method, my entry would be a long position near 525 526, again depending on whether or not I get confirmation from the candle formation at that point. If not that, if it is an even deeper correction, then my bias would be for a long position at 513 514 near 61.8 levels. So these were the two ways of using it. It depends on how you identify swings. I personally prefer the second one. It is a bit more conservative. The trades that you get will be a bit sparse and well placed from one another. The levels are also well differentiated. So I prefer this one instead of going for the immediate swings. Now let's check out the same method on indices. Now let's go to the indices. I have already marked the swing highs and the swing lows for Nifty. Now I'll show you guys why I'm picking why I'm picking these particular swing highs and swing lows and not this one. Now the reason for that being, basically the market goes into phases. It is trending and range bound and then trending again. So I'm not considering the base at 9500 because clearly the market had a good higher high higher low structure and then changed all the way to the range bound market for 1 to 3 trading sessions. So I'm not including all the way from 9500, but I am including the point from where it picked up momentum again, broke the range and went back into forming higher highs and higher lows. So if I were to plot out my retracement using my base at 10 to 6 or 10 to 5 roughly, so and ending at the swing high again, as I told you guys, so I have multiple levels. I have 0.236, 0.382, 0.5, 0.618 as we had earlier, and I look for confluences between my zones and the Fibonacci levels. Now I had a good confluence at 10700 with the 0.236 zone, 23.6% as you want to say it, and a good demand zone. Now again, I told you guys this is an area and not a pinpoint entry. So if you had that, you could have easily taken a long position somewhere near this level. Even if not that, you could have you could have planned a short position here as well, near the zone or the swing high level. So there are multiple ways to take it. You can tweak and experiment depending on your trading style. This is a very versatile concept where you can mix it with your indicator reliant setup, with your price action concept, anything and everything, it works. Now we go ahead and try to do the same thing on Bank Nifty. Again, I have marked with these two fluorescent or lime lines the swing highs that I will be using to plot my Fibonacci retracement levels. Now if I plot the same thing here as well, again I told you guys the same reason why I am not selecting the swing from this point here is just as in Nifty, it went into a range at this point. So it pretty much invalidates that started from here and then this higher high, higher low formation. I don't think that is the correct way to do things. So my swing starts from about 21,000 and goes to the recent swing highs or recent price highs, which is 23,100 roughly, 23090. So again, as you can see, I could have planned a very decent trade when it broke the 0.236 level or when it bounced off the 0.382 level, which is actually yet to happen, but this can be a trade. It is near my zone as well as the Fibonacci level. If this is not being respected, I can also go for the 0.5% or 50% retracement level because I have a zone there as well. So this is how you can use Fibonacci levels in in conjunction with different concepts. I personally use demand supply. You can use any other thing. You can use trend lines as well. You can use support resistance. You can use Elliott waves, Wyckoff analysis, every single thing. Now another thing that you should keep in mind with Fibonacci is there are two cases where your particular Fibonacci retracement can be invalidated. When either the swing high or the swing low or the base or the end of your retracement is taken out, your Fibonacci retracement plotting is invalidated. It will not work thereafter. Then you need to either plot a new one or adjust the old one so that it takes into consideration the recent market moves as well. Another thing is, if the market transitions from strongly trending into sideways, then again if the sideways period is there for a prolonged period length of time, then again your Fibonacci level is invalidated because the amount of time that a retracement should take, it should not be a lot longer than the impulse move that the retracement is coming from. It can be a couple of trading sessions long, but if it is too long, then I would prefer to think of that level as being invalidated, that retracement as being invalidated, and I would wait personally for formation of fresh structures of higher high, higher lows or lower low, lower highs in order to get my Fibonacci retracement plotted again. Now Fibonacci retracements, keep in mind, I'm saying this again and again, they provide some areas of interest to watch on pullbacks. They can act as confirmation tools if you get a trade signal in the area of a Fibonacci level. They are not to be used as standalone tools. This is a very powerful and simple concept. You can easily apply this if you have a very basic understanding of price action. I hope this discussion added some value to your trading knowledge. If you have any questions, be it Fibonacci or any other thing, be sure to write it down in the comments below so that we can look at it. If you want more such videos covering different concepts, be sure to mention them as well in the comments because that is where we get the ideas for the videos from. Whatever you guys want, we'll try to create something and push it out for you guys. Also guys, if you want to read more on how I personally use all of this, if you want to know more on how I plot or how I draw these demand supply zones and how I prefer to take entry using both of these concepts together, then you can definitely check out the channel that is mentioned in the description of this video, the Apex Education channel, where there's only educational content. So you can check that out as well. No trades will be shared there, no watchlist trades. It is just explanation of concepts. So you can check that out. I have posted it, I think, a couple of months ago. So you will need to search it, but just search or just scroll up and you'll find a Fibonacci explanation of similar kind, but with the marked entries there. I think which will be a lot easier for you to understand if you want a bit more detailed perspective on Fibonacci. I hope you guys had a good time and I hope you guys have a good weekend. Thank you so much for watching. This is all that we had. And as always, don't forget to like, share, subscribe and push the bell notification icon. Also, if you think this video might help a new trader, be sure to share them. It might as well add some value into their trading style and clear their mindsets. Thank you so much for watching guys. Bye.